part of why Bitcoin has exploded is because the user interface has gotten better.
The biggest risk to Bitcoin is good government policy.
Yeah, pretty much, because we're contrasting Bitcoin with their currencies. So that's what I imagine that the direction that argument went was. When a smaller country bans it, or even a large country that doesn't have a lot of financial weight, like for example, Nigeria is a very large country. They've banned it from their financial system at least. But the United States and Europe are the two kind of 800-pound gorillas that could at least for a period of time probably affect price notably if they were to ban it. And it's worth there's a couple different types of ban. So one, it's really hard to have any sort of enforceable ban where you say people are just not allowed to own it under penalty of jail, right? So they did that. I mean, the Americans did that for gold for like 40 years, from the mid 1930s to the mid 1970s. It's kind of remarkable, the land of the free, and you literally couldn't own a benign metal, just a yellow metal. And so you could conceivably have one of those for Bitcoin, but it's harder, right? Because it's hard to prove someone has it. If you are required to turn it in, you could just you could destroy your hardware wallet, for example. And how do they know whether or not you have a backup? It's basically the technology is better for making it hard to confiscate and prove that someone still has access to it. Kind of that classic boating accident meme. That is hard, so it's harder than gold. And so a lot of countries haven't necessarily tried that route. I mean, even China, as authoritarian as they are, I think they've seen that that's not a clean way to go. And so the easier way for them to do it is to say, okay, we're not going to go after the consumer level to say you can't own it, and we're not going to try to enforce that. Instead, we're going to sever it from our banking system and ban industrial scale mining. So what that does is you basically go after the fiat on-ramps, right? So you go after a handful of major companies. Those are easier to track, easier to stop, very easy to enforce. And then also any sort of large mining operations you can generally identify and cut them off. And so basically, Nigeria has done this as well, where they say it's not illegal to own Bitcoin, but banks can't send money into Bitcoin exchanges. And so you still have a vibrant peer-to-peer trading community in Nigeria, and they can still receive Bitcoin from, say, foreign sources, right? So if a Nigerian does graphic design for someone and then they get paid in Bitcoin by an international source or a domestic source, I mean, that's still totally doable. They can send Bitcoin out if they, there was that article in The Guardian where there are protesters, the government cracked down and froze their bank accounts, so they're using Bitcoin. There are merchants that were just trying to do their job, and they had capital control, so they were able to use Bitcoin. So that's still possible, but it can slow down adoption if you were to get something like that in the United States or Europe, where they say these big, giant, multi-trillion-dollar economies, the on-ramps are severed. There would be a number of people that still want to buy Bitcoin, and so they would find ways. It just makes it so that if you make it so that institutions can't own Bitcoin, if you make it so that part of why Bitcoin has exploded is because the user interface has gotten better. It's gotten more easy to access it, and so that would be essentially a step back, right? So that would increase the hurdle of being able to get it, make it a step harder to get it. And so we should expect that could conceivably slow it down. Now it depends on the reason for the ban. Because if the currency is falling apart and then they ban it, that people are going to find a way anyway, right? So it's one of those things where generally countries that block alternative types of money like gold or Bitcoin, that's generally when you want to own something like gold or Bitcoin. And so if the United States, for example, that 40-year period where we banned gold, if you look at a chart of 10-year treasury returns over inflation, and it's kind of the annualized return from buying and holding a 10-year treasury till maturity. It's been most of the last, say, 150 years positive, meaning you earned interest. It was higher than inflation. But there was a really big period, it was about 40 years, where it was negative. And that ban on gold perfectly overlaps with that period, right? So when treasuries were not good investments, gold was banned. And even that, gold, it was actually really hard to enforce that ban. There were very steep penalties if you were caught, but there was very, very few prosecutions, and they didn't go door to door to get it. And so there are a lot of entities that, as far as people can tell, just hodled their gold through that entire period, and that's just how it went out. So I think with Bitcoin, you'd have a similar phenomenon where, again, it's really hard to ban on the consumer level, even harder than gold, I would argue. You're essentially banning math or encryption or the ability to memorize a number in your head. Hard to prove someone has it. And so it's really my view about the fiat on-ramps and the institutions and those large pools of capital that are, if you want to see number go up, right, then and market cap go up, eventually those large pools of capital have to get into it. And so if they're severed from doing it, that can slow down adoption, unless things get bad enough that it's a crisis of confidence and people flock to it. So it's kind of like it could slow it, but it also could be a sign that things really are going well with the currency. If you were to see those major rule of law countries kind of ban that.
Well, we should consider the different types of risks, because we've said the risks here to Bitcoin, because there's risk like cataclysmic risk which destroy Bitcoin's use case and pushes it down towards zero. There's risks of slowing adoption, and there's price risks. And I think all of these things we're going to talk about have varying effects on each. I don't see a ban on Bitcoin by certain governments as being a risk to it destroying Bitcoin, but I do certainly see slowness of adoption and a price risk to investors. One of the things that seems to be happening is I almost think we're past that point as well, Lyn. We may see other smaller countries ban it, but I think we're kind of past that point as we have other countries accepting it and considering legislation to make it legal, as we have in El Salvador, but also Cuba, I think, is passing through legislation at the moment as well. And I've also think we've seen in the US that there is enough weight within senators. There's enough senators now who are starting to show an interest. We know we have Senator Lummis, but also Ted Cruz recently. I know certain people are working on forming an SPAC, which is not something I fully understand because I'm not American, but forming an SPAC to actually, as I understand it, that is to put people to run against those who may be against Bitcoin. So Bitcoiners have some power now. They have some weight. So, and also even with the infrastructure bill itself, Lyn, that felt like more of an acceptance of Bitcoin. Like there's a benefit. And if the US was to ban Bitcoin, it would destroy a lot of US wealth and quite a considerable part of the economy.
This is something I've argued in some of my pieces, where people tend to say if it gets too big, governments will ban it, whereas I tend to say the opposite. The bigger it gets, the more resistant it gets to banning, because the donor class ends up owning it, politicians end up owning it, and it becomes a very large pool of capital to influence politics, and that that you don't want to destroy hundreds of billions of dollars of American wealth.